Welcome to the Source of Commercial Real Estate, where we discuss all things non-residential commercial real estate, including finding and funding deals, seeking opportunities, and using commercial real estate to live the life that you want. I am your host, Jonathan Hayek, and today I am talking with Steffany Boldrini. Steffany is the principal at Carlo Real Estate Investments, a firm that focuses on self-storage investing. Originally from Brazil, she moved to Silicon Valley at the age of 18. After a successful career in tech sales, she decided to become a real estate investor after receiving inspiration from successful investors in the area. She has over 5 years of experience in the industry and a track record of successful investments in a range of commercial properties, including self-storage, car washes, and short-term rentals. Steph, how are you doing today?
I am wonderful. How are you, Jonathan?
I'm great. Thanks for asking. I sincerely appreciate you taking the time out to talk with me today. Really looking forward to this conversation. Why don't we start out with you telling us a little bit about your background, how you got started in real estate, and what your investing looks like today?
Absolutely. So, yes, I have been in the Bay Area since 2000, and I'm very grateful that I am in the USA. And my career was mainly technology sales. I was working at startups here and decided to diversify a bit and looked into angel investing. And I was dating someone that was a real estate investor at the time. And very quickly, real estate became a much clearer form of investment that is a lot safer in many levels. And so I decided to start learning everything I could from him and decided to start investing. Most recently, I decided to only focus on self storage because it's recession resistant and it does well in good times. So it's a very strong asset class that I adore. And that's very, the gist of it.
Cool. So, did you start in self storage, or what was kind of your path towards real estate investing?
Yeah, my ex was in the retail space, and I started learning and making offers in little shopping centers. However, I learned about self storage as I was, educating myself and listening to podcasts. And someone said that self storage does well in good and bad times, and that was a while ago when we all knew something was about to happen to the economy. We just didn't know when. So I decided to start learning everything that I could and ended up purchasing some car washes along the way because it had a self storage in it. That turned out to be a poor investment idea that I'm actually converting to something else today and, focus on self storage alone.
Those tough deals are certainly the ones that we learn the most from. It's always great to
Yes.
have a success and make money, but we don't always learn the lessons we need to learn from our successes.
Yeah.
And I do already know a little bit about your foray into car washes. I heard you on Taylor Lote's podcast. But I think it would be really informative. We don't have to spend a ton of time. I know it's sometimes hard to talk about failures or learning experiences. I
Yeah.
heard someone today say it's not a failure, it's a seminar. So that's another way of thinking about it. But tell me about one of these tough car wash deals and what was intriguing about it from the start, and how did it not go the way you thought it would go?
Certainly. So what was intriguing was that it was the only deal that I could find in 2018, I believe, 2019 or so. I was looking for a long time. And because car washes are harder to sell, they have a better cap rate. So that is what drew my interest into that particular deal. And I thought, how hard could it be to manage a car wash? I just transfer everything that I learned, in real estate from retail and self storage. I didn't even bother to go to a conference. I didn't even bother to ask anyone about it. And I just bought it. And it turned out to be a gazillion moving parts that something happens every day. People try to break in when you're accepting coins. We cannot move to 100% credit card because not everybody in that town has credit cards, which this never crossed my mind, right? I'm like, we're just going to move to credit card and everything is going to be smooth sailing from there. No, not everybody has credit or debit in certain cities. And then things started to go down when our best employee went to jail for some personal reasons, unfortunately. And so it has been very difficult to find reliable people managing it remotely. And that is why right now we're converting to something else, these car washes.
So you've had this deal for several years, so it doesn't sound like it was so bad that you had to just sell immediately. And so have there been some redeeming characteristics, or has it just been a train wreck from the start?
Oh, when the first couple of years when he was there, it was fantastic because he was managing it flawlessly. And so it just started going down after my best employee left.
So many investors are lured by the idea of these high cash flow assets, or at least on paper, they're
Yeah.
high cash flow. Right now, I mean, car washes are red hot.
Yeah.
You see people on social media talking about their cash on cash returns they're getting from
Yeah.
things like from car washes. Laundromats are another
Yeah.
one. And
Yeah.
I mean, I think most of us that have been in real estate for at least a few years know that in general, the high cash flow properties and the high cash flow assets also have the potential for more headaches and more management. The lower the cash flow and the lower the cap rate, in general, the easier and more hassle-free it is. With the lessons, I'm sure you've learned a ton of lessons on this deal. Why not take the lessons that you've learned and become an expert in this car wash asset class and dominate it, knowing what you know now, rather than pivoting to other asset classes? Why not double down on car washes, knowing what you know now?
That's a fair question. I always tell people you need to figure out what is important to you. Is money more important to you than car wash? Is time more important to you than self storage? Is something in between more important to you? Short term rentals. So you really need to prioritize what your goals are. I do not like car washes. I do not want to learn more about them. I don't want to deal with employees at that level. So I don't want to learn how to deal with employees at that level. So it's just something I chose not to. But it is a phenomenal asset class for if you want cash.
I love what you said there about needing to know what kind of investor you are. If cash flow is the ultimate goal and you don't care about anything else but having the highest cash on cash returns, then maybe car washes and laundromats could
Yeah.
be a thing for that type of investor to look into. But it seems like you are looking for something slightly more passive, something slightly more hands off, where you don't have employees to manage, you don't have cash to manage every single day. I am right there with you, Steff. When it comes to assets that involve a business along with it, I don't even look at it because I'm not interested in it. It could be 1,000,000% cash on cash return, but
Exactly.
if it means I have to manage hourly employees remotely
Yeah.
from a distance from across the country, I'm just not interested. My
Yeah.
time is worth more than that, and I don't want the headaches
Yeah.
of that sort of thing. And so you're now pivoting to self storage. I want to get into self storage, but first, you live in the Bay Area. You've got some insight into some things going on in the Bay Area. I think San Francisco and Silicon Valley is such an interesting market right now. Um, San Francisco has tons of headlines, for mostly negative headlines, and you are there. I've seen that you posted some insight on LinkedIn recently. You also released your own podcast recently, talking about some of your insights into the commercial real estate market in the Bay Area. I want to just kind of open it up to you and ask for your reflections on what is happening in commercial real estate in the Bay Area. What are your thoughts on it?
Yes. Should I keep it politically correct? Because everything that is happening is political.
You say what you want, and I reserve the right to edit it later
Edit.
on.
No, I'm joking. Yeah, it's very unfortunate what is happening to San Francisco, and it's a clear reflection of, the political views here in San Francisco, to be honest, because they're very anti-police. They're pro letting people do whatever they want, pro giving drugs to homeless people, and letting them live on the streets. And there are car break-ins every single day here. It's such an easy problem to fix, but they don't fix it. So people started to leave the city, right? People get tired. We pay so much money in taxes, and for it not to be up to our standards it's a shame. So people are leaving, and of course during COVID, they were very radical with how they dealt with it, and the city was closed for at least one full year, and then it started to open very slowly. In restaurants, we could eat outside only and things like that. We had to wear a mask when only going to the restroom, but not when sitting down. So nothing started to make sense, and now the numbers are there to prove it, right? So cell phone data usage decreased by nearly 70%, which is mind-blowing. Of course, office is the one that started to go down first because people are not coming to their offices anymore. Companies are starting to demand people to come back to the office, but they're questioning whether it should be in San Francisco, right? Because employees don't feel safe here. So that is the problem with office. And then now hotels are getting affected because companies don't want to have conferences here either. Business meetings are not really happening because people are not going to the office. And also retail is hurting a lot. I think half of downtown retail is closed, from Westfield Mall to AT&T's flagship store to Nordstrom and everything else. So it's a beautiful city. I think there is hope for it. I think the mayor understands what the job, what she has to do, and I think she's trying. However, the problem lays in the district people. Apparently, they have a lot of power here in this city, so that is where sometimes she's getting stuck. But in conclusion, I believe this is a huge opportunity for people to buy prime real estate in a great city. So, offices are selling for 80+% discount now. Hotels are going into foreclosure. So there are quite a few opportunities to purchase if you believe that, the city will come back.
For listeners that have never been to San Francisco, San Francisco is a gorgeous city. The views from certain parts of the city are amazing. The views, from the bridges, from Alcatraz, there are really some panoramic views, and it's a unique city. It's diverse. You obviously have the tech companies close by, but it does seem like some decisions that have been made over the last several years,
decades. Yeah.
They're now compounding. And my own experience, a couple of years ago, I spent a few weeks in San Francisco, And it was kind of strange to be in like this beautiful city with so much to offer, and then you walk in the streets, with these $1 million condos, and I mean, you literally see homeless people defecating on the
Yeah.
sidewalk, and it's like,
Yeah.
what in the world is going on? Like, why, how is this happening? Why is this allowed here? And I want to be like understanding and compassionate, and acknowledge that there are complicated issues, people on drugs and homeless people, and the how expensive it is to live and survive in San Francisco. But it does seem like the city kind of went too far over the edge, and hopefully they're going to try to reel it back and make it a more attractive place to live. So people paying $3,000 and $4,000 a month for a studio apartment
Yeah.
downtown feel motivated to want to live in the city, because it's hard to justify paying millions of dollars for a studio or one bedroom condo. To pay thousands of dollars a month for a very small apartment, and have to live in that kind of squalor. And so it'll be really interesting to see kind of the trajectory that San Francisco and the Bay Area heads. Do you think? Do you anticipate that San Francisco is on the dip right now? Do you think it's going to go lower, or is it not really important? And is it more important that it's low now, and now might be a good time to invest? What are your thoughts on the trajectory?
With regards to real estate or the situation here?
Yeah, real estate.
Okay. I do think that real estate is still going to continue to go down for at least another year because there's so much that needs to get absorbed, not only in office and retail as well. Plus, they need to really fix it, right? So companies do start to come back and do conferences and events here if they do, right? Because if you maybe you get used to Vegas and things are super easy there, they might not even consider coming back, right, for conferences. So I do think there will be more time to buy, and it does take time for things to get absorbed. So that's the great thing about real estate, that you can wait another few months to really see where the bottom is.
It seems like, unfortunately, a lot is going to ride on what happens with the tech companies. Because I know there are some large tech companies that are not using their office space at all, or only using a fraction of their office space. And so many of the retailers and restaurants in the city rely on that foot traffic.
Mm-hmm.
And when you have tech companies like Uber and Facebook that aren't requiring their employees to be in the office, they could be spread out all over the country, and they're not in the city to provide that walk-in traffic to some of the retailers.
Mm-hmm.
It'll just be really interesting to see what happens with that walk-in traffic in the city.
Yeah. Yeah, it'll take time. But I do know that companies are starting to ask employees to come back. But again, yeah, it'll take time. And I know
It's
that some employees do not want to come back either, so to the
right.
office.
It's something that is definitely going to take time to build back up.
Yeah.
And yeah, I mean, so many cities are dependent on office workers for their downtown areas to thrive, and so it's just going to take time to see how things play out.
Yeah.
Thanks for your insight into the Bay Area. I'm not betting against San Francisco in the long term. It's too desirable of a city.
Yeah.
It's too beautiful. The views are too great, and the weather by and large is really great. And so I'm not betting against it, but some things will
Agree.
definitely need to change for sure. I want
Agree.
to go into now your pivot into self storage, and so still non residential. So tell me about why you chose self storage. There are other asset classes that could be less management intensive than car washes. So what do you like about self storage?
Yes, the number one thing is that it is indeed a very solid asset class that does well in both good times because people buy more, keep more, and they don't really look at their credit card bills and they just have the storage there for a while. And it does well during bad economic times because people downsize and they go from a 3-bedroom home to a 2-bedroom home and they need an extra space to store their belongings. So that is really the main reason. And of course, number two is a lot easier to manage compared to car washes or other asset classes. Is not easier than the main ones like retail or industrial, right? Where you get a tenant for a very long time. But because I don't know where retail is going and industrial has been extremely competitive, I decided to focus on self storage.
Yeah, I love that. I know there's been a ton of competition in self storage. So let's talk about your competitive advantage. So, what is there a certain market you're looking at? Is there a certain size, a certain deal type that you're looking at? What is your competitive advantage so that you can get deals over other people?
Sure, we look for value add opportunities where we can increase rent, decrease costs, and also expand the facility. And ideally, definitely below the Sun Belt in high growth markets or good population growth markets that have a good below a low poverty rate and solid numbers. And we're also going to be building some facilities in California. So just getting a contract right now for a piece of land, which I'm very excited about. And
So,
yeah.
yeah, so ground up, I mean, that sounds exciting. Can you walk me through a little bit of your thought process? Do you have a partner that's a contractor, or how did you think about the ground up idea?
It's a goal of mine to own 1 billion in the next 10 years worth of self storage, and I just broke it down year by year how many facilities we need to acquire, and I came up with one new ground up per year, and that is how that came about. So I ended up meeting a broker at a coffee shop actually in Corona del Mar, California. And he introduced me to the amazing broker who found us some amazing deals. So that is how.
And are these on pre-existing self-storage or just land?
Just land. The ground up development or goal is just land.
Mm-hmm. Okay. And let's talk about metrics. When you're
Mm-hmm.
analyzing a self storage deal, either on land, and I know I've heard ground up people say you've got to buy the land right, otherwise the deal
Yes,
won't work. So
exactly.
tell me about like what are important metrics? What are the most important metrics that you're analyzing when you're looking at a potential self storage deal?
Yeah, great question. So definitely price per square foot. How much rent can you get in that location? And how much it costs to build. So all of these three things are incredibly important. After we go in contract officially, we're of course going to do a feasibility report. So they will check to see exactly how much is needed, what kind of sizes are needed. Should we do RV parking or not? Can we do RV parking in that location or not? And so it gets more tied up as we are in contract and doing the next steps for the research.
So, ground up development in Southern California. I know people listening to this are like, man, how can the numbers possibly work on something like that? And so, can you walk me through? Is there like a locals competitive advantage? How, yeah, walk me through how are the numbers working for you doing ground up in California?
So we don't have the exact construction costs yet, right? So that is why we ask for a longer feasibility time frame for land. So right now, after contract, do the feasibility report and see what we can build with the city, right? Confirm that we can build. Can we do 2 stories? Can we do RV parking or not? And after that, get the construction estimates and then reverse engineer. Can we afford all of this really? And is it going to make sense? So, how much can we build in that, let's say, 3 acres? And then you reverse engineer everything to really confirm that the numbers work.
Steff, you talked about having this amazing broker relationship. How are you finding deals, whether it's the land deals in California or pre-existing deals in the Sun Belt? What are your keys to finding great deals?
It's hard for the existing ones. It's hard. Um, so we look at properties that come up online through brokers, and we also have a team that is cold calling people for off market deals, property owners, and also the broker relationship for the land. I have to say that you need to find a really good broker if they're looking for land for you. It's hard to find a great broker, and that is a very, very important step because you don't want to be the one following up. Hey, how are you? Do you have any deals for me? And reminding them, right? They need to know that that's their job and they will send you deals and they'll be looking for it. So I'm grateful that I was able to find this broker that is helping us a lot because they've been in the area for a very long time. So it's just hustle. I went to the coffee shop. I was just working over there, and this guy started talking to me, and turned out he was a broker and he knew other brokers. So it's just showing up and going to conferences and events and masterminds, and things will start to shape up after a certain period of time.
You talked about cold calling and having a team that's cold calling. I assume, correct me if I'm wrong, I assume those cold calls are going to mom and pop owners.
Yeah.
What's the sentiment of mom and pop owners of self storage right now? Are they asking ridiculous prices? Are they wanting to hold on to this asset for forever? Are you getting leads cold calling? How is that? How is that strategy going?
Yeah, some sellers are not realistic about the prices that they want. So, we just have to wait and follow up with those later. But some others, they want a certain number and that's all that they care about. So, some others are waiting to see who's going to be the next president and then they will decide to sell or not. So it's just a matter of being extremely well organized and have your team well prepared so they can follow up at the proper time.
Yeah, I don't know if you have found this. I have found significant challenges working with mom and pop owners. I've had more success going through brokers because when I talk to mom and pop owners, they don't seem to have a good idea of the market. And so they just pick a number out of the sky that they feel like, sounds good, like kind of
Yeah.
a pie in the sky number. They don't understand cap rates. They don't understand income and expenses. And so it makes it really difficult to negotiate and reason with people who are not operating from a point of reason and logic. Have you had any similar experiences to that?
I'm not the one who is responsible for that part. I have a partner that is, so
Okay.
I'm not really talking to the sellers myself. So I won't be able to answer that
Okay.
question.
Okay.
But what I can say, coming from a sales perspective, having a successful sales career, is that follow up is incredibly important. I don't care if they have a pie in the sky number today, things might change later. And building a relationship with them is very, very, very important. They will not forget that you're the one that is following up with them every 6 months or however often you would like to.
Great advice.
Yeah.
So I want to connect your current self-storage endeavor to your car wash experience. And so there are some similarities here. And so they're non-residential and they're being operated and managed from from out of state potentially. And I know
Mm-hmm.
Corona del Mar, it's not local to you, and so it's essentially out of state, or at least at a distance. What lessons are you taking from your poor car wash experience to now operating a different asset out of state?
What is my experience?
Yeah, so like what lessons? So you had difficulty with employees, with some break-ins, and
Yeah.
just difficulties with managing an asset out of state. So someone might say, well, it seems like you're going right back into the same exact scenario where you're in California and
Yeah.
you're looking for assets in the Sun Belt. So what's going
Mm-hmm.
to be different this time? What lessons are you going to implement that are going to make managing these assets different than your car wash experience?
Oh, definitely. Self storage is a whole lot easier, right? Because people can rent things online from their phones at the facility if you don't want to have a property manager there. So, and nowadays you can even have a screen there that they touch and somebody shows up, from your call center. So it is a lot easier to manage today. There are locks that you can put that see if there is movement inside the unit and notifies you for any potential theft. And of course, with cameras and having people watch the cameras from another country where it's daytime when it's our nighttime is extremely helpful. So those are the lessons. Of course, you need at least one very good person that you visits the facility at least once a week, if not more, and deals with locks and things like that and cleans up the garbage, et cetera, et cetera. But it's night and day compared to car washes. Those
I
would be the
imagine
main things.
I imagine it's a different clientele, the people that are renting a self-storage unit versus the people that are doing self-serve car washes. I assume your clientele isn't paying for a self-storage unit in quarters at the point of purchase.
No.
And I imagine that makes a big difference dealing with a different kind of clientele.
Yeah. And we try as much as possible to have them on a credit card automated payment every month. However, some people certain locations, they don't have a credit card, so we demand money orders and that they must send a picture of the money order so that we just deposit them with the picture. So we don't deal with cash. We do not accept cash at the car wash. I'm sorry, at the self storage, and so that is a great way to deal with people that don't have credit cards in those locations.
And Steff, what does your team look like? You've said a couple times we. I know you do work closely with brokers. Do you have
Yeah.
other partners with Monte Carlo? What does your team look like in these self storage deals?
Yes, because my goal is so hefty, I need to partner up with people. As a wise venture capitalist once said here, he had a couple of successful exits with his own startups that he created. He said, when I was creating my companies, I could have kept 100% of the company for myself. However, in order to grow to the size that I wanted it to grow, I knew that I had to split my pie with them. But my pie is a whole lot bigger than if I had kept it for myself. So you get a small slice of the pie. However, that slice is a whole lot bigger, and that is how I view partnerships. So yes, I do have partners in different forms. People that find deals and they need funds, or other partners that find let's say, an off-market deal that they would like to partner up with on the operation side. So I have to.
Sure. And you have a huge goal of having, I think you said, $1 billion in assets in 10 years.
Mm-hmm.
So this is I want to ask you sort of a philosophical question about investing because I personally go through this a lot. You talked about having this hypothetical pie, and you can either have a small slice of a very large pie, or you can have the whole pie, but it would be very small. I
Yeah.
go back and forth because when you get to that big pie, you have there can be some headaches that come along with that. You can have partners, and partnerships can sometimes go bad. You can have employees and VAs, and I think it comes down to the what we talked about earlier with the lifestyle and what kind of investor you want to be. And so, can you talk a little more about why not stay small and have 100% of a smaller pie and maybe have a slightly, I don't know, less management or fewer headaches than having a larger pie? Can you talk a little bit more about your philosophy there?
Yes. On the personal side, I just want a private jet, to be completely
Nice.
honest. I don't want to wait for an airplane and have a flight delayed.
Nice.
Uh, However, on the business side, I am reading a book right now, and this guy is fantastic. All of his books have been great. The Who Not How author, and his latest book is 10x is easier than 2x, and it's so true. When you have a goal that is 10x where you currently are, the answer is so clear on what you have to do because there's just one answer to get there. And when you're doing 2x, you're just doing busy work. And it's always going to get busy, and you'll never have time to really get out of that mindset. So, that is a really good book that I recommend people thinking. And when you're at that level, you're going to be dealing with more professional people. Who wouldn't want that, right? I would rather have an amazing team that is actually paid really well versus having to deal with VAs in other countries.
Great. Yeah, I love that perspective. It's a concept that I think about a lot for myself, and so I really like hearing other people's perspectives on that. Steff, we are getting towards the tail end of our conversation here. I have a couple more questions to wrap us up. What is the best deal you have ever done?
In real estate,
Could be anything.
I recently told people invested in Nvidia. That has been a really good deal for me.
Okay, there's a hot take.
Yeah.
So tell me, what is NVIDIA? Tell me more about that.
Oh, it's just a company in Silicon Valley that is building something that a lot of people need. I think it's chips. I'm sorry for the terminology. I'm not super familiar, but they're building things for video games, for crypto. It's things that everyone needs in a lot of different industries, and they're far ahead of many other people.
Awesome. What is the worst deal you've ever done? And we may have already talked about it.
Yeah, we did. The
Okay.
car
So is
wash.
that a car wash deal? Not so great.
Yeah.
What's your best tip for finding deals?
Oh, best tip for finding deals. Join a mastermind of your asset class.
Great. What's your best tip for raising capital?
You need to build your brand. It's going to take work, and but you must build your brand. You need to start going on podcasts, conferences, speak at conferences, and really build your mailing list.
Perfect. And Steff, if listeners want to connect with you, where would you like to send people?
They can find me on LinkedIn if you search for my name, or our website is montecarlorei.com.
Perfect. Steff, I sincerely appreciate you joining me here today. This has been a great conversation. Thank you for your transparency and humility in sharing a deal that didn't go well, sharing your insight about the San Francisco commercial real estate market and your foray now pivoting into self-storage facilities. So I sincerely appreciate your generosity of time and expertise here today.
Thank you so much for having me, Jonathan. I really appreciate it.
Great. And listeners, I appreciate you. Thank you so much for listening. If you got value out of this conversation today, make sure you hit subscribe wherever you're listening to it. And feel free to reach out to either one of us. We would love to connect with you and talk to you about commercial real estate. Listeners, I sincerely appreciate you. Until next time, take care.